welcome to my YouTube channel. I'm Ishola Emmanuel and I'm the founder of Forex Academy. I'm a financial market coach, a Forex stock and cryptocurrency trader. If you are new to this channel, hit the subscribe button now, turn on the notification bell, that way you get notified as soon as I drop an informative content just like this. Also, if you love this video, don't forget to hit the like button. It really means a lot to me and it encourages me to keep bringing more content like this for your benefit. In one of our previous video, a viewer dropped a question in our comment section for me to review on order block. And by the way, if you have any question, kindly drop it in the comment section and I promise you I'm going to review it and bring it to you as soon as possible. So having said this, let's go to what I have for you today. So I've received a lot of text and calls from different traders, most especially those in my Telegram community. And by the way, if you want to join our Telegram community, the link is in the description below. Click the link to join our Telegram community. It is absolutely free. And most of the time, the question they ask me is, how do I trade order block? Because basically, I'm an order block trader, and that's what I use to make profit in the market. So I've decided to make this video so that everybody can benefit from it. And today we are going to be looking at what is an order block, when do order blocks happen, how to identify and trade order blocks. So these are the three things that we are going to be looking at, and I'm going to be taking you to the chart so we can see the real and the practical way of trading order blocks. Alright, so what is an order block? By definition, an order block is a defined area where buyers and sellers of smart money enter the market and moves the price away from the market to new area of interest. Alright, so quickly I want to explain to you what are smart money, alright, or what is smart money. Okay, so smart money is the capital that is being controlled by institutional investors. Okay, so that's what smart money is. They are just large capitals, that are big capitals sitting in a particular area, and these capitals are being controlled by institutions. Okay, I'm going to be getting there, showing you how the smart money comes in place, the concept, and where all this money are being seated or are seated in the market. So I will go over the definition again. An order block is a defined area where buyers and sellers of smart money enter the market and moves the price away from the market to a new area of interest. And I said, most of the time this area are always tested back, all right, because if they leave a huge amount of money, they will have to go back there to take that money back so they can make their profit. And as you can see the diagram over here, around there is where those money were seated, the smart money, this way it was, and you can see the market came back to that area and took all those money, and the market starts to go to the downside. All right, don't worry, I'm still going to take you to the practical aspect of it and you're going to see it. So let's go to the next thing. When do order block happens? All right, most people does not know when order block happens. They don't even know how to identify it. So I've written here, an order block happen when price is about to change direction in the market. So you need to know that an order block happens when price is about to change direction in the market, and the people that cause price to change directions are institutional traders. I think I explained that earlier. The institutional traders are the one that cause the price to change direction in the market. And quickly, I will just show you some of the things that I'm talking about here. All right, so if you notice in this chart here, you will see that the market was in an uptrend. The market was moving up, and all of a sudden the market just starts to fall. All right, so around this area where this market changed the direction is where the order block is being seated, and if you notice, it's been marked out with this red line here. Okay, so this is where the order is seated in the market. All right, and also another way of identifying it is the last bullish candle. That if you're in an uptrend, the last bullish candle before the bearish candle is considered as the order block, or as the smart money, or where the smart money is, or where the money is. So you need to identify the last green candle in an uptrend. All right, and if it's in a downtrend, you need to identify the last red candle if it's in the downtrend. For example, this market was coming to the downside, and you can see where is the last candle, the last red candle before this market starts to push up is around here. This is the last red candle before this market starts to move to the upside. So that's how to identify or to know where the order block is. Well, basically, the order block happens when the market is about to change direction. Okay, I'm trying to make this video as short and fast as possible so that you can get the most out of the video, and also it won't be too lengthy. So let's go to the next thing, which is how to identify and trade order blocks. All right, so this is the most important aspect of this video that you need to pay rapt attention. So how to identify and trade order blocks. Number one, you need to start from an higher time frame. Sorry about that. Start from an higher time frame depending on the trader which you are. If you're a scalper, if you're a position trader, if you're an intraday trader, if you're a swing trader, you need to start from what? An higher time frame. And if you're a swing trader, you need to start from a monthly time frame, then go to a weekly time frame. Then your entry point is going to be 1 day time frame. So I used to advise traders use maximum of 3 time frame. So if you're a position trader, that means you have to start your analysis from 1 week, then 1 day, then probably your entry is going to be 4 hours, or you change it to 1 hour. So if you're an intraday trader, your analysis should start from 1 day. You're looking for your order block on a 1 day time frame, then you move to 4 hours, then your entry should be on a 1 hour or 30 minutes. Okay, and if you're a scalper, then you should start from 1 hour, then you go to 30 minutes, then you can go to 15 or 5 minutes as the case may be. But whichever way you are trading, or which trader you are, you need to start from an higher time frame. So the second one is, if the price has created an order, wait for price to come back to the order. It brings me to the second point that I want you to get, and it's going to help you a lot, is that patience is required for you to trade order block, for you to be an order block trader or smart money concept trader. You need to have patience. If an order is being created, you need to wait for the price to come back to that order so you can maximize and have an effective and profitable trade. You don't have to rush it. Rushing it will only cause you to lose money. So wait, since you know where the market is coming back to, you need to wait for it to come back there so that you can take the trade and have a profitable trade. And number three, price must not break the middle candle of the order block. Price can touch the tip of the order block on the middle of it. I'm going to explain this when we get to the practical aspect, when we're on our chart, but just know that the price must not break the middle candle. And which middle candle am I talking about? I mean the last bullish candle before the bear candle, or before the bear starts to enter the market. That bullish candle, you have to divide it and pick the middle of it. So the price must not break the middle. The price can be tested at the tip or at the middle, but once the price has broken the middle, has broken the candle to the upside, that means that order is not going to hold. So the price must not break the middle of the order block. Price can touch the tip of the order block, but must not break the end, or must not break out from the middle of the block. Some prices breaks above the middle, all right, to the upside, because when I'm teaching, I love balancing my teaching. For example, if you take a look at this order block right over here, you will see that the price created an order block, which was this. If you go to the lower time frame, you will see a bullish candle before this bearish candle. But if you see, when you divide this candle, the price break a bit above the middle order block and continues to sell. So it doesn't mean if the price, sometimes rather, price can break above the middle of the order block, but the most important thing is that price must not break above the candle, either the wick or the body. The price must not break above these price level. All right, and lastly, setting your stop loss below the test and respected order block. So when you see that an order block has been respected, whether on the tip or at the middle, you set your stop loss below that order block, and I'm also going to be showing you how to do that. All right, quickly, the tools needed for you to trade all the blocks: you need your Fibonacci indicator, your horizontal and trend line, which I'm going to be showing you how to use all those in a minute. All right, so now we are going to be going to I'm going to be going to our chart so that I can explain how you can apply all these theories and practical and make real money for yourself. Alright, welcome to the chat. But before we start, I would like to tell you that I'm picking random subscribers that will be subscribing to this channel, and I'm giving them access to my VIP academic group where you get tons of trading benefit. Also, my mentorship class is coming very soon where I get to teach my students a new strategy I discovered in trading the financial market, and you can be the next person attending this seminar for free. Just click the subscribe button now so that you can get those benefits. Let's get to identifying order block in this market. So currently we are trading Euro USD, and we want to identify the order blocks and how we can trade Euro USD. So now we see that this market is in a downtrend right over here. All right, so how do we enter this market? So for example, if you have this market right over here, let's assume this way we saw the market and the market was in a downtrend. What we have to do is pick the last bullish candle before this market starts to move to the downside, which I'm doing currently. And for you to get the 50% of this candle, which is also what I'm talking about, that you trade, you make sure the candle is in the middle. All right, just pick your Fibonacci and just place it there. All right, and just try and mark out 50% that you can see there, just around there. Yeah, this 50%. Then you can delete your Fibonacci. All right, so we can see the market came back to the 50% level. Remember, I told you that the market can either pass the 50% a bit, but the most important aspect is that the market must not pass this overall high that is here. Once the market break out of this overall high, what that means is once the market move out of this overall high just like this, it has rendered this order block invalid, so you cannot trade the sell again. It means that this market has created new high, and there's probability that this market is going to continue to buy. But now we see that this market is just around this area, and the market came back, did the 50% and retraced. You could have been waiting for your sell, and you can see once the market when the market get to this 50% level, there was a quick sell to the downside. That means the smart money were here. There were a lot of money at this order that is here, and the institution came back to that level, took all the money, and they started to sell. Also, another quick example. Let's look for another quick example so that we can identify our order block. So we can see clearly here that we have what an uptrend. The market was coming to the upside, and we see clearly that the market break to the downside. So if you have to go to a lower time frame, we see that there is an order block in this area. So what do you do in this scenario, or what I do in this scenario, is that I pick the week that this market formed, okay, which is the best thing to do, or you pick the entire candle, all right, and look for the middle of the candle, look for the 50%. But if we are picking this week alone, we can look for the 50%. Just zoom and pick your Fibonacci 2. So pick your Fibonacci to draw the eye, the recent eye. All right, it might not be that clear, but try and zoom it in and make sure you see what you are drawing. All right, pick the horizontal line, pick the 50% level. All right, you can delete this Fibonacci right now. You can see the market came back and used the order that is here, and you can see the market didn't break this high. It respected this order, and the market continue to the downside to sell, and that's what we see happen. And that's basically how you trade your order block. And you can see a massive sale to the downside. All right, so that's how you trade your order block in a downtrend. How to trade an order block in a downtrend and uptrend rather. And currently I've moved to gold USD, where we are going to be trading an uptrend. We can see this market was in an uptrend. Now we want to trade the continuation. Look for the order block that broke the current or the recent supply zone, and if you have to zoom in, you can see. All right, alright, so when we zoom in, you can see that this was the order block that causes the change to happen. So what do? You pick the last bearish candle on that order block before the move to the upside. Remember the last bearish candle before the move to the upside. Then you can pick your Fibonacci if you need it, which I advise you to pick your Fibonacci, get the 50% level from here, alright, and pick your horizontal line, mark out the 50% level, then you can delete your Fibonacci. Then you can see clearly the market came back to this order block, this demand order block that break the supply zone, and you can see the market still came back to retest it, and the market moved up, and you will have bagged yourself a reasonable amount of money. So now, how do you set your stop loss? Okay, when you enter the market, you enter your sell here, or your buy here rather. What you should do is put your stop loss just a bit below this, just like a bit below here, and then you can target any area of your choice. Since the market is in an uptrend, you can target any area of your choice, and clearly you can see the market didn't even get to your stop loss. So that's how to trade our order block, and I believe this video has really given you a lot of information on how to trade the order block. If you love this video, please hit the like button, like this video, so that I can be encouraged to keep giving you more content like this. Also, if you want me to talk about any topic in the financial market, drop it in the comment section, and I promise you I'm going to attend to it as soon as possible. Until next time, have a profitable trade. Bye.